Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. So today will be Tuesday, 12th of December. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Right. So as usual, let's have a recap of what happened yesterday during the US session. As we know that during the European and US session yesterday, there's no release of key economic data. And what's interesting over here is market participants are now awaiting for the all-important Federal Reserve FOMC meeting outcome, which is very likely there will be no interest rate cut or hike stampede to keep the Fed funds rate at 5.25% to 5.5%. But what's market is actually wondering or deciphering right now is how will the Fed guide the market in terms of interest rate trajectory in 2024, as we know that market participants right now are increasingly more on the dovish side based on the CME Fed funds futures. Market participants are actually expecting close to 4 interest rate cut of 100 basis point in total for 2024. But during the previous release of the Federal Reserve dot plot, the federal officials or the Fed officials only pencil in 2 interest rate cut for 2024. So market participants will start to see whether the Federal Reserve officials will sway according to market participants, and as well as Fed Powell press conference later on how he actually look at the current state of affairs in the US economy. But all in all, what's interesting over here is that the US stock market continued to power up yesterday, and the Nasdaq 100 as well as the Dow Jones Industrial Average broke above our short-term pivotal resistance, where we got to actually validate the short-term bullish momentum. So what's interesting over here is if you look at the S&P 500 heat map as of yesterday, we could see that almost all the sectors are in the green with the exception of the 7 mega cap stocks. So it's been a while since the market is not being led by the 7 mega cap stocks, and especially with the Nasdaq 100 breaking up above the 16,160 short-term pivotal resistance, not being led by the 7 mega cap stocks like the likes of Microsoft, Nvidia, Apple, Google, and Amazon, and even as Tesla. So what you could see is a very positive optimism, especially in the other semiconductor stocks yesterday, where actually those who actually followed the SOXX, the semiconductor stocks index, that broke above a fresh 52-week high yesterday as well. So what we could see over here is a very strong bullish momentum throughout the rest of the market, with the exception of the 7 mega cap stocks. So that seems to me that bullish momentum, at least in the short term, still remains pretty much intact for now on the US stock market. So with that, right, there are no other key data that was released on the US market yesterday. So now let's just jump straight into the short-term technical. Okay, so let's start with the major US stock indices first, since we talk about the strong performance of the US market yesterday. All right. Okay, so let's start with the Nasdaq 100. Okay, Nasdaq 100. So let me expand my screen so that you all could focus more on the screen instead. Okay, so Nasdaq 100. What we could see that yesterday we do have a key short-term pivotal resistance at 16,160, expecting at least a pullback down towards the bottom of this minor range configuration. But however, price power up yesterday. Yes, hourly RSI is in overbought, but there's no clear signs of a bearish divergence, as you could see over here. Okay, RSI kind of remains on the same slightly higher, or we could see yesterday's push up. Okay, so all in all, right, yes, we could still see a bit of pullback coming close back towards 16,160, which is now turns resistance, turns into a pullback support. So for today, right, I will use 16,000 figure level as my short-term pivotal support level for today, and also in line with this rising 20-day moving average that price action managed to retest on last Friday, and from there it starts to pinch up much higher high and higher low on yesterday US session. So for sure 16,000 in terms of the market price movement, and in terms of the technical analysis will be a key short-term pivotal support to watch out for today, to maintain this ongoing bullish momentum that is being seen in the Nasdaq 100. So flip to a short-term bullish bias on the Nasdaq 100. Next resistance to watch will be 16,310, followed by 16,430. Okay, but however, if you start to see an hourly break below 16,000 level on the Nasdaq 100, then this short-term bullish momentum will be in jeopardy, to see the Nasdaq 100 slip back down again to retest the lower limit of this range configuration at 15,780, 15,690, which is the swing low of 4th of December. Very similar movement on the Dow Jones Industrial Average as well, which is the Wall Street 30 we call in our platform, cleared above 36,300, which is the short-term pivotal resistance we have on Friday and on yesterday. Price action going to inch much higher. What we could see over here is that there is no clear signs of a bearish divergence on the RSI. Higher high, yes, even though it's overbought, potentially could be a bit of minor pullback to retest 36,300, now turns into a near-term pullback support. So with that, we'll be using 36,130 as my key short-term pivotal support level for today, which is so close to the lower boundary of this medium-term ascending channel that is in place since 10th of November. Now acting as a support, and as well as this former minor swing high area of 8th of December turns into a pullback support after it retested it on last Friday. So as long as 36,130 key short-term pivotal support holds, potentially the US Wall Street 30 could test the next resistance at 36,555. A break above this level potentially exposes the next intermediate resistance at 36,890, which is the upper limit of this medium-term ascending channel that is in place since the low of November. Right. So if the US Wall Street 30 starts to actually shape a breakdown below 36,110, then this short-term bullish outlook will be in jeopardy, to expose the near-term support level of 35,900, which is the swing low of 1st of December. A break below it will see a start of a minor corrective pullback towards this 35,650, which is also a confluence with this rising 20-day moving average. All right, so all in all, given yesterday's positive movement on the Nasdaq 100 and the US Wall Street 30, we'll be actually flipping back to a short-term bullish outlook bias for these two indices. Hang Seng, which is the Hong Kong 33, quite surprisingly, it managed to actually help at the 16,100 level, support level that we highlighted. So price action managed to actually move up much higher, and today's price action managed to actually continue to inch higher as well, in line with the bullish momentum that was being seen on the US stock market yesterday. So with that, if you look at the hourly RSI also managed to inch a higher low, right, and goes above the 50 level mark. Okay, so all in all, we start to see a bit of short-term positive momentum starts to creep back into the Hong Kong 33 index, and with the price break of this minor descending channel resistance and a retest at the first hour opening session of the Hong Kong stock market, so and also at the 16,100 level, it seems to me that the odds are coming back potentially for at least a minor counter trend rebound to retrace this ongoing medium-term downtrend that is in place since 16th of November high. Okay, so with that, what are the resistance to look out for? Will be for sure the 16,500 and 16,890 level. So a break above 16,500 exposes 16,890, which is also the congestion area of 29th of November and 4th of December, and confluence with the 38.2% Fibo retracement of this ongoing short-term downtrend that is in place in 16th of November high. Short-term pivotal support to maintain this potential minor counter trend rebound scenario will be 15,890, slightly below the low of yesterday's intraday low at 15,960. Okay, but however, if we start to see a breakdown below 15,890, then this bearish impulsive sequence within this short-term downtrend phase could potentially resume to test the next support level at 15,500. Okay, so flipping to a short-term counter trend rebound scenario for the Hong Kong 33 index, German 30. Okay, so German 30, yesterday, we do have a short-term pivotal resistance at this 16,910 level, where price action is coming very close, approaching this level already. What's interesting over here is that the hourly RSI continue to flash out a bullish bearish divergence scenario over here. Price action going to move high, but RSI is actually sloping downwards at the overbought level, so indicating to us that there is still could be a potential chance of a we call it a bearish snapback of a scenario, or a minor corrective pullback scenario below the 16,910 short-term pivotal resistance that we highlighted yesterday on the German 30. So with that, we'll be still using this 16,910 level as my short-term pivotal resistance level, still looking for that potential minor corrective pullback scenario to take shape for potentially for today. Key first support level to watch for sure will be at 16,735 level. A break below 16,735 exposes us the next near-term support level of 16,590, which is this minor congestion area of 6th of December to 7th of December. Okay, so still maintaining that short-term bearish outlook for that potential minor corrective pullback scenario below 16,910. Only a breakout above 16,910 invalidates this bearish scenario to see the further impulsive upmove sequence to test the next resistance at 17,100 on the German 30 index. FX market. So yesterday FX market, yes, we see a bit of dollar strength coming into play, but the dollar index over here still remains below intermediate resistance at 104.40 level. All right, so with that, we could still see the euro dollar still holding above our short-term support level that we highlighted 2 days ago, since last Friday at 1.077. RSI continue to shape a higher low over here, and right now is attempting to actually inch back up the 50 level mark. All right, so with that, potentially we start to see a bit of what we call a short-term positive momentum start to creep back into the euro dollar. So no change, still using 1.07 as my short-term pivotal support level, which confluence with this upward sloping 50-day moving average, maintain that short-term potential bullish outlook. First resistance to watch will be at 1.082, that confluence with the 200-day moving average as well. A breakup above this level exposes the next resistance at 1.09. All right, which is very close to the 20-day moving average, also acting as a resistance as well. So these are the 3 key levels to watch. But however, if we start to break down below 1.07, then we may start to see the extension of this corrective decline that is in place since end of November this year towards the next support level at 1.063, which is also the medium-term ascending trendline support that is in place since the low of 3rd of October. Okay, so still maintaining that short-term bullish outlook on the euro dollar. Now moving on with this sterling dollar, that is much more positive compared to the movement of the euro dollar as it's continued to trade very closely with the rising 20-day moving average after whipsawing around it on last Friday. So still using 1.125 figure level as my short-term pivotal support level to maintain this bullish outlook. RSI also continue to shape higher low and now trades above the 50 level mark as well, indicating to us that there's some signs of positive momentum, short-term momentum creeping back into the sterling dollar. First resistance to watch will be at 126.10. For sure, this is actually the minor swing high of 6th of December and 7th of December last week. So put away that that's last week high. So this will be the first test of the sterling dollar uh, ahead of the FOMC meeting and ahead of the BOE meeting this week as well, which is on Thursday. So only a clear break above 2610 level could offer much more clarity on the bullish side of the story to at least retest the minor range top of 29 of November as well as 30th of November, acting as a resistance at 127.30. Right, but however, if we start to say hourly close below 125 figure, so that actually tell us a breakdown of the 200-day moving average as well, potentially expose the next support level at 124.30. Okay, so that's for the sterling dollar. Dollar yen. So for dollar yen over here, yesterday we actually flipped to a bearish bias. Why? Because it's coming it really hit that counter trend rebound resistance level. So we have a bearish bias at 14670 short-term pivotal resistance, which price action actually reacted right off this 14670 pivotal resistance, which is indeed a clear key turning point level or inflection level for the dollar yen. So with that, ahead of this turn at the 14670 key short-term pivotal resistance level, the RSI also starts to actually shape a bearish divergence condition on the overbought. Okay, price go higher high, but RSI lower high. Okay, so with that, we are still maintaining that short-term bearish bias on the dollar yen in anticipation of a further price slide to at least test the first support level at 144.20. Only a break below 144.20 could expose us with the 200-day moving average, and as well as last we call it Thursday swing low area at 142.20/141.60. Okay, level. Only a breakout above 14670 will invalidate our short-term bearish outlook to see the continuation of this minor counter trend rebound towards the next resistance at 14740, followed by 14860, which is also confluence with the 20-day and the 50-day moving average acting as a resistance as well. Okay, so still maintaining that short-term bearish outlook on the dollar yen as long as the key pivotal short-term resistance at 14670 holds. Aussie dollar. So on the Aussie dollar, what we could see over here is that it's moving in line with the euro and the sterling. That means a bit of dollar weakness coming back into play. A nice turn, what we could see over here, right above the 65.20 short-term pivotal support level that we have. So price action now has really gone up above the 20 and the 200-day moving average, indicating to us that there's some signs of short-term bullish momentum coming back into the Aussie dollar. So no change. I don't want to keep it so tight of yesterday's swing low area. So yesterday's low, US session low is at 65.50. I don't want to put it so tight at 65.50. So still maintaining 65.20 short-term pivotal support level. Maintain that short-term bullish outlook. First resistance to watch 66.20. Break above it exposes the next intermediate resistance at 66.65/67 figure level on the Aussie dollar. Hourly close below 65.20, then this short-term bullish outlook will be invalidated to expose us towards the next intermediate support level, which is the rising 50-day moving average, and as well as the medium-term ascending channel support that is in place since 26th of October low, confluencing at this similar support level of 64.40 next. All right, so still maintaining that short-term bullish outlook on the Aussie dollar as long as 65.20 short-term pivotal support holds. So all in all, if you look at the current short-term technical outlook that I share with you all on the major FX pairs, major FX pair, pardon me, potentially we could start to see some signs of dollar weakness coming back into the FX market ahead of the FOMC meeting, as well as the release of the latest Fed dot plot projection on Wednesday. Now, gold price. So gold price continue to, despite the dollar weakness coming back into the picture, gold price continue to remain rather weak at this point in time. So we are still looking for the price action to actually retest the 200-day moving average at 1955 level. So with price action going to inch down much lower, we'll be actually tightening our short-term pivotal resistance level for today. Okay, will be at 1997 level. Okay, okay, so as long as 1997 Titan short-term pivotal resistance holds not surpassed on the upside for spot gold XAU/USD, potentially it could start to see further potential, still maintain the short-term bearish outlook, with the next support level to watch at 1955. However, an hourly close above 1997 will actually invalidate this short-term bearish outlook to see potentially the start of another bullish upleg scenario to continue its medium-term bullish uptrend that is still intact, with the next resistance to watch will be at 2017 for sure, then followed by the 2000 or for 2000 this 2040 level. Okay, so still maintain that short-term bearish outlook on spot gold, as long as the Titan key short-term pivotal resistance 1997 is not surpassed to the upside. Okay, with the support level to watch will be at 1955, the upward sloping 200-day moving average. Now, oil price. So for oil price, continue to inch much higher yesterday, going to inch higher, but still holding below that first resistance that we are monitoring, 72.40, followed by 74.36, which is the downwards 20-day sloping moving average. So with that, RSI going to inch much higher, going to actually shape a higher low above the 50 level mark as well. So indicating to us there's some signs of short-term positive momentum creeping back into the picture. So with that, we will use a Titan key short-term pivotal resist support level for today, slightly below yesterday's US session low, 70.20. So as long as 70.20 short-term pivotal support holds, potentially West Texas Oil or WTI could continue to shape this ongoing minor counter trend rebound within its medium-term downtrend phase. First resistance to watch 72.40, above it sees 74.36. However, an hourly close below 70.20 will invalidate this short-term minor counter trend rebound scenario for West Texas Oil to potentially seize another down leg 68.90, followed by 67.55, 67 figure support level on West Texas Oil. All right, so with that pretty much sum up with the short-term technical outlook on the major asset classes that I want to cover. So before we go, key economic data to watch for today will be the all-important US CPI data. But before the US CPI data, we have a Eurozone Economic Sentiment Index for December that will be out at 6 p.m. Singapore time. Then thereafter, the CPI data out at 9:30 p.m. Singapore time, where market expecting the core inflation rate to remain the same at 4% year on year. So that will be close to a 2-year low. Okay, so something to keep an eye keep close watch for ahead of the US Federal Reserve FOMC meeting on Wednesday. So with that, that pretty much, okay, let me share with you. I think you guys can't see the viewer. Okay, let me share the screen again. I think the screen was stuck a while ago. Okay. Okay, I believe that you should able to see the economic calendar screen right now. So yeah, 9:30 p.m. Singapore time will be the release of the US core inflation rate for November. So market is still expecting a no change from the previous we call it month, still stay put at 4% year on year. So with that, that is actually close to a 2-year low, a 2-year lower, okay, on core CPI rate for US. Okay, so if it turns out we in market expecting, so that could actually add a bit of impetus for this ongoing short-term bullish spurt up in the US price action that was seen yesterday. Okay, so with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.